All right, guys, weekend's over. Back to work, back to work. Hope you guys had a fantastic break for the weekend, but it's about that time of day again here, isn't it? Time to get back to work. At a busy week ahead of us. It's Monday evening. It's April the 19th, 2021. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got some gold. Got some Nasdaq, got some S&P on my radar for tomorrow. Boy, speaking of tomorrow, Tuesday's trading session, got a bunch of bear markets on our hands right now, right? Big pops up and collapsing back down. S&P is bearish. Nasdaq is bearish. Gold is bearish. Is this the big reversal they've been waiting for, right? Or is this just a deep pullback off these extreme all-time highs we're seeing right now? We're definitely bearish. I've got my eyes on some sell setups for tomorrow. We'll talk about those details here in the video tonight. But of course, right, if we do end up reversing, going higher here, I'll make sure we know when the time is right to buy the reversal. And of course, where the targets will be on those moves going higher. So whether we continue this move going lower or whether we reverse off of these lows, I've got a great plan of attack for you guys to make sure you're ready for the action on Tuesday's trading session. Before we jump in, then we'll get our hands dirty tonight on these charts. Before we get the details going, I just want to make sure to remind you guys, if you haven't done so already, make sure you subscribe to our YouTube channel. I publish this video newsletter with my best trade ideas for the following day. I publish it every evening, so make sure you subscribe to our YouTube channel. And when you do, hit that little bell icon. Always get notified every time I publish something new, so make sure you subscribe so you don't miss tomorrow night's video. And if you guys have any questions, don't forget, I'm always checking the comment section, so don't be afraid to drop your questions in the comment section below. And if you enjoyed the video as much as I enjoyed making it, if you tune in every evening, if you enjoy this video content, do me a big favor, hit that like button, that thumbs up button for me here on this video newsletter. So thank you so much again for tuning in. Make sure you subscribe, hit that like button if you guys enjoy it, and drop those questions in the comment section below. But enough of the intro, though. Time is ticking. Tuesday is right around the corner. What do we have here right now? We got a bunch of bear markets right now, right? Got a bunch of bear short-term trends, right? S&P is bearish. Nasdaq is bearish. And we get the gold is bearish. Now, the S&P and the Nasdaq are relatively straightforward here. They're both bear markets into a trading range. So my job tomorrow is looking to sell off resistance levels above the top of that trading range. So I'm looking to short the pops right now on the E-minis, on the S&P and the Nasdaq. Gold is not as cut and dry because gold, of course, has a range. We got this big old pendulum swing coming down on gold right now. Gold's probably going to be the more difficult of these markets because I'll be looking for a short setup here up around these areas of resistance, but it's right back in the middle of the trading range. So I'll talk about my plan to trade and avoid trouble in the middle on the gold here for tomorrow. So if you're an S&P trader, NASDAQ trader, gold trader, by the end of tonight's video, you'll know exactly to trade the short side, the long side, and everything in between. So let's not waste any more valuable time. Let's jump right in. Before we take a look at the charts, though, let's take a look at the schedule for tomorrow. We don't have a lot of news here this week. It's the fourth week of the month. We've got earnings coming out in the pre-market and after the close, so be aware we will likely have some fireworks in the overnight session and the pre-market. We get about 80 of the 500 S&P companies reporting either before the close or before the open or after the close. So be aware of that. There will likely be some volatility on the Nasdaq stocks and the S&P stocks in the overnight and the pre-market. And, you know, again, there's not a lot of news here. The FOMC announcement is next week, so there's no Fed speakers. You'll notice, right, there's no Fed speakers. They're locked out right now. And, you know, really, I would imagine probably the biggest thing in everyone's mind this week is probably going to be those COVID numbers. You know, we're seeing a lot of numbers coming down right now, but places like India, different places in Eastern Europe right now are getting a spike in COVID cases. And I would imagine those types of headlines, right, any big vaccine headlines, any big COVID numbers headlines this week will probably be market moving events. There's nothing really we're looking forward to tomorrow. You'll notice there's there's not much news on the schedule tomorrow. We're not going to see really any big news until we get to Thursday, and the big news, of course, on Friday morning. So, whenever there's no major news on the schedule, I always kind of anticipate the best setups are probably going to be in that 10 o'clock hour if you're trading the E-minis or the gold with us tomorrow morning in our trade room. So, obviously I'll be looking for setups any time of day, right? I focus on the U.S. trading session. And when there's no major news, though, in the morning session, usually what happens is the opening bell at 9:30 comes out. We get a little bit chop and slop there. And usually some of the best setups between that 9:45 and 10:45 block for tomorrow. So tomorrow morning, obviously 8 o'clock Eastern time, we'll be getting together in our trade room. I'll put all the membership links you guys need in the description of this YouTube video, but no major news on the schedule for tomorrow, right? Will we see any surprising earnings overnight? Will we hear any, big scary headlines regarding COVID numbers? Those will definitely be some potential market moving events, and we'll keep our eyes open on that. But no scheduled news here. Really nothing we have to worry about here until Thursday or Friday this week. So we'll be a quiet news week here this week. Well, a quiet scheduled news week. I wouldn't be surprised, though, if we see some updates out of the White House, right, out of the ECB, things like that will shake things up. So I'll do my best, of course, to keep my eyes open for you guys in the trade room tomorrow morning, and we'll trade, of course, whatever unexpected announcements that we get. So S&P's up, Nasdaq is up, gold is up. Let's grab some charts here. No major news tomorrow, so we are looking for setups here. Everything is pretty much bearish. If we jump into these charts here for you guys tonight, there's a lot on this chart right now. Let me kind of clean this up a little bit. There's a lot on this chart right now. The most important factors on this chart, and the most important thing right now, is this is a bear market into a trading range. If you look left, right, you can see the market pretty much went 3 legs up to finish off last week's moves, right? They, of course, popped up and then pretty much proceeded to rotate what is basically 1, 2, 3 legs lower here, right, for the bears. The bears definitely have control of this momentum. That is for sure. Whether or not this is going to be bought up by long-term buyers or not, that is, of course, to be determined. This may just be a nice deep pullback in an overall very bullish long-term trend. As a short-term trader, though, I'm looking for a short-term momentum. I'm not a long-term trader or a long-term investor, if you will, right? You can't really invest in the futures markets to begin with, right, because of contract expiration. So I'm more of a focused on a short-term momentum guy myself. And again, the bears really have a lot of the control here in the short term, right? They are 3 legs down into pretty much what is seen as a trading range. Now, anytime we have a range market, the range acts as a magnet. And because the bears have momentum, my job is pretty straightforward. I'm looking for areas of resistance above the range to get short and ultimately send us back into that trading range and potentially spit out on the other end and take out some of these lows down here around that 41.15 area there later on in the week. So that's the basic idea of the S&P. It's a bear market, again, short-term bear market. It might be a pullback opportunity long term, but as a day trader, I'm looking at this as a short-term momentum. I have my range below me acting as a magnet, and I'm finding levels of resistance up overhead. Now, speaking of up overhead, you'll notice we have a big juicy gap on that chart. These gaps do act as magnets, and I'll use this throughout the rest of the week this week. Now, before I get that comment in the comment section below, I do realize the gap has been filled, right? We gap down, we fill the gap, and we keep on going. So I don't mean to confuse you on this. The gap has been filled, but anytime there's a big gap between Friday's closing price and Sunday's opening price, remember, futures markets close on Friday at 5, right? And they open up at 6 o'clock on Sunday, right? I know it seems backwards, but that's the way they work. So whenever there's a big gap between Friday's close and Sunday's open, that closing price from last Friday, we call them weekend gaps in our trade room, they become magnets, right? And that is really probably one of the biggest variables as we go into tomorrow. I'd love to sell a nice pop and use this range as a magnet down here, but let's not forget, right? That weekend gap is up there. and we pretty much finished last week inside of a range up there, which is also a magnet. I will say though, right, the range from last Friday is not nearly as important as the range from this afternoon, right? Recency is always important, right? The most recent range is definitely going to be the more important range here for us. But this may definitely cause a big pullback, right? We may end up getting kind of stuck, if you will, around this trading range. We may also see the market just jump up and collapse back down in, which between you, me, and the rest of YouTube is kind of what I would like to see happen here for tomorrow. So I think the only challenge we have right now is just kind of waiting for the pullback. You'll notice I've got this measured move marked up off the low, and I've got this trend line, right, coming in off the low as well. These are important clues here. Let me get rid of this text here, just kind of keep things clean here for us. Now, to make it as simple as possible, there are really two locations I'm looking to get short around. One is off this resistance zone overhead, and the second one is up around that weekend gap. Now, these two areas are both levels of resistance, but you can probably assume that the momentum, let's say, for the buyers won't be a very big deal on a shallow pullback. But if we get a much deeper pullback, that momentum now will be a much bigger problem, right? We're not going to feel very bearish when this market runs, or if this market runs up into that weekend gap. And so because of that, this is where I have to be a little precise on what I want to use for my entry technique. So for example, if I can get up into this sell area, what I'd like to do is get this thing up into my sell zone, get these buyers to come in, and basically try to buy a pullback, right? Try to buy a pullback. Once those buyers commit buying that pullback, you know exactly where their stops are, and you can use those stop losses basically as fuel, right, to sell into those stops for a run back down to retest the low. I call these failure patterns or failure setups. Okay, now there is kind of one variation of this shallow pullback that you'll want to be aware of. You'll notice that trend line is coming up off that low. Let's say, for example, we go up and we almost immediately now pull back, right? And then the buyers come in. If that happens, if they get kind of that strong move up, strong move back down, then the buyers come in. Yeah, see, now that trend line is in a much more difficult spot. I'm not going to want to sell right into that trend line. I have one of my favorite setups called traps, right? Trap setups, to avoid basically buying into that trend line. So this is where a little bit of discretion will come in, and we'll talk more about this in the trade room tomorrow morning. But one kind of idea here would be, if we do end up kind of going up quickly and down quickly, I'm going to try to use a trap entry to avoid selling into that rising support trend line. All right, that's one of the kind of the nuances or the gray area on this pullback. Now, if we do pull back, which is kind of what I would like to get for tomorrow, if we do get that deep pullback, right, take out that weekend gap, or at the very least, right, kind of take out some of these lows up here, right? We may definitely take that low out. If we do see this thing really rip, right, and run up into that trading range, right, maybe it gets the weekend gap, maybe it doesn't. Again, what's the problem going to be? The problem's going to be a lot more bulls in the market, and those bulls are not going to give up without a fight on this. So in that situation, I want to give the buyers the benefit of the doubt. Assume they'll try a few times. Assume they're going to put up a kind of a fit right here, trying to buy here. I'll let them try twice, and then again, we'll use those stop losses. And again, that range as a magnet down here, price pops up, take out some areas of resistance. Buyers try once, buyers try twice. We call these nested, right? Nested failure, basically nested variations. Now, a lot of times what will happen is the market will pop up, and because everyone's caught on the wrong side, 1, 2, it'll really run lower, right? You'll get those buyers trying once, buyers trying twice. One of my favorite ways to trade this pop off the low, or this drop off the high here, is to mark up right that new channel right there, that new low, mark up that new kind of hidden channel, and grab that short right off the high of that channel. Now, I'll use a failure pattern, right? A failure to sell into stop losses, basically selling the pops. When we're pulling back to the high of that channel, we'll have to kind of wait and see what it looks like. The two most common entry triggers I'll use off the high of that new channel are going to be buyer failures and bull traps. Now, I'm not going to go over all the details of all the entry triggers and all the entry techniques that we use in our trade room, but if you want to get a much deeper dive and get more examples of the techniques we use to actually trigger the entries, I do cover all of that in our free trading classes here at School of Trade. What I'll do is I'll put a link in the upper right-hand corner for you there. I have a very nice short free trading class for you. We'll go over my 3-step strategy. We'll talk about how I find levels of support and resistance, and most importantly, how I actually trigger the entries right every morning in our trade room. So definitely grab that little pop-up there in the upper right-hand corner if you want to learn more details on these specific entry techniques that we use, things like traps, failures, pullbacks, strength moves. All my favorites are covered in that free trading course link that popped up there. Now, I'm sure you're wondering right now, if the market runs higher here, how do we buy this market, right? What's the plan if we buy this? There are two kind of scenarios as the market goes higher I would like to see to be a buyer. One of them would be a strong move up, right? A pullback to the moving average and hold that pullback. If I can get what I call a 1, 2, 3 reversal, and again, I'd like to see them kind of get up around these lows and push through it. If I can get that 1, 2, 3 reversal pattern and get some momentum now coming off of that low or that pullback, now what I can do is I can mark up that low, that high, I can find my low, and I can look to buy the first pullback off the low of that channel. Now, keep in mind, right, I don't want to buy into the high, right? So I want to make sure I find that entry before we get there. Another thing I'm looking for here is as the market runs up, let's say, for example, this thing just bolts, right, and runs higher and starts going sideways back inside that range. If we do end up spending some time inside of that trading range, it becomes a bull market now into a trading range. What do we do in a bull market, range bound market? We find levels of support below the range. And what do? We wait for the pullback. We wait for sellers to look to get short on that breakout pullback, and we use their stop losses. We use failure patterns ultimately, right, to buy at support levels below the low of that trading range. And again, it's a very simple idea, right? You wait for the price to pull back, wait for sellers to get short on the breakout pullback. Again, at this point, if we spend a couple hours treading water going sideways, that new range acts as a magnet. So I'm not going to try to short this thing anymore. I'll look for those buyers, I'll look for that seller failure and buy back up into that trading range. So those are a couple of things I'm looking for as the market runs higher here. What if we go lower? What if we go lower here? As we go lower, there's a lot of open space down. You'll notice there's a lot of wide open space. I'll tell you, if this is the beginning of a big reversal, this will be nice here for the bears tomorrow, right? 41.13, big round number at 4,100. Got a big wide open space there. If we can crack below these lows here, here's a couple things I'm watching for as we go lower. There's a lot of strong movement right to the downside here. And so we definitely imagine, right, the bears probably have a target right at that low right now. That's, of course, where I'd be looking to take some profit off if I can get my short off of this high. Once I take out this low, then I want to see if these bears can hold the pullback and go. If I can get a 1, 2, 3 breakdown, right, just like a 1, 2, 3 break up, if I can get this to 1, 2, 3 move, remember, this range is a magnet right now, right? So if I do go back to those lows, I can't assume they're going to hold that pullback. Right? But if they can hold that pullback and run lower now, I'll call that my 1, 2, 3 breakout pattern. Again, it's a range, right? Got to get a breakout. So 1, 2, 3 breakdown. Now, mark that low, mark that high, and I've been looking to get short. Remember, the first test is always the best test off the high of that new hidden channel. 1, 2, 3 breakout of the range into a first channel pullback. Now, I'm not necessarily just selling blindly off the high of that channel, right? I'm looking for buyer failure triggers. I'm looking for bull trap triggers into pullback combinations, strength moves coming off the high of that. Again, I cover those specific entry techniques, those entry setups in our free course linked up in the upper right-hand corner. Can I buy this low, right? Can I buy this low? If we go back to that low here, can I buy down here? I definitely can, because I'll be at a major turning point. The only challenge will be all of that momentum. Momentum will be very bearish if we end up back around those lows here. So how do I buy it but still respect the momentum? Well, it's a range overhead here, right? That range will act as a magnet still, even though the bears will definitely have control of momentum. In order for me to absorb that momentum and kind of respect the bears here, let them try once, let them try twice. Once those bears now have tried a couple times, one of my favorite entries is a trap below that low, right? Or a buy off a hidden channel, right? But the key here is, though, I want to see bears trying a couple times. I want to buy off a support level always, right? Always want to buy off support. Maybe it's a trap low, maybe it's a hidden channel low, and then we can let that thing rip going back higher here. Don't forget, too, if we do get that buy off the low, I can measure the amount below, I can measure the amount above, take some profit off at the top of that channel, and leave that runner right up to that pendulum swing on the opposite side. So I'll tell you, I got a great plan of attack here for tomorrow. It's a relatively cut and dry scenario here. The big question right now is do we get that deep pullback? Right? How deep does it go? And do we get a chance to short this thing, or do the buyers grab it and run this thing back up to retest the highs? Whatever happens, we are ready for tomorrow. That's for sure. How about some Nasdaq here? Nasdaq's in a very similar position. You'll notice here, got a weekend gap, right, between the Friday's close and Sunday's open. There's that big range, right, up overhead, which again will act as a magnet. But as you can see, though, we definitely have a bear market coming down, 1, 2, 3 legs down, and I've got this 1, 2 legs back up here, which kind of gives me an idea of where I have a level of resistance. So as you can see here, there's not a lot different here on this Nasdaq. The buyers, of course, they want to go back up and take out those highs, hit that weekend gap. Sellers, of course, right, they'd love to go up and short this thing back down again, or take this thing lower, get a big move down potential to that 13,654, 65 area, right, which is that next big low here on the Nasdaq, right? And you could look at this and say this is one range down here and one big pendulum swing right off the top here. So definitely could get good here for these bears, but we've seen a lot of these pullbacks over the past few weeks, and a lot of them do get bought right back up here. Again, long term, it is very much a bull market, but I am not a long-term trader. I'm a short-term trader. I want to go home flat every night at the closing bell, just my style of trading. So for me, I'm focused on the short-term momentum, short-term trend, and the bears definitely have that with 3 legs down right now, pretty much into a trading range. So again, it's a bear bias, right, into a range. I've got my range acting as a magnet. I've got levels of resistance, right, got this kind of trend line overhead, my resistance zone overhead, the top of this channel is overhead. So there's definitely no shortage of overhead resistance. I think my biggest question right now is, right, do we get that deep pullback with those buyers trying once, buyers trying twice, right, and then shorten back down in, find that hidden channel, and we're shorting off the high of that channel, right? Again, buyers once, buyers twice, selling into stops, selling on that pullback, target, of course, back down to retest the low. We call those nested failure patterns. Or do we see a relatively modest pullback, right? We pull back, maybe we go up into this area of resistance up overhead. I love it when we have these rising trend lines, because then what happens is as the market runs up, right, buyers, of course, now think this thing's going back to all-time highs, but unfortunately it's a range pullback here. Hopefully we'll get that buy coming in off the moving average, and make them look to get short into those stop losses once again with a buyer failure pattern up off the highs. And much like the S&P, right, if we do end up going up and coming back real quickly here, the idea is the same, but the reality is we've got that rising support trend line to trade around that issue. Let them try once, let them try twice. I'll look for that short now, not into stops, but more importantly, using a trap entry setup. Again, traps are always my go-to setups whenever I'm worried about, in this case, selling too close, right, to a rising support trend line there. That will definitely be, right, some opportunities here for us as we get this pop off this high. Our biggest kind of variable right now will be if we do end up running up, if these buyers do hold that pullback, and if they jump off the moving average. We know where these buyers want to get to, and my job will be pretty simple. I want to find that channel. I want to find one of my entry triggers, right? Again, usually they're bear traps, they're seller failures into pullback combinations off the low of those channels. Again, I'll cover all the specific entry trigger details in that free trading class that I mentioned in the upper right-hand corner, but that would be a 1, 2, 3 reversal into a first channel test, right? That hidden channel pullback, a very, very reliable setup there. Really, no matter where, I just don't want to buy into those highs, that's all. And of course, if we do end up running back up and chopping around sideways, that becomes it's the same range from last week, but that becomes a bull market now into that trading range. And of course, my job is pretty straightforward, right? Find levels of support, which might end up being that prior high, right? Mark up that prior high, get underneath the range, get those bears to try to get short there, right? And we can use those stop losses with our failure setups, use the range overhead as a magnet. The hard part tomorrow is going to be if we end up in this area here. Let's say we go up 1, 2, 3, right? We take out those highs. That'll be the hard part, right? If we take out those highs, I'm not going to want to buy that pullback off the low of that channel. What I'll probably do in that situation is if the market did find its way all the way back to retest those highs, I'll still use this range as a magnet, but because it'll be so bullish, I'll let the buyers try once, try twice, and I'll look for what's kind of like a nested failure with a trap high up there. So if we did take out those highs, right, for example, the range would be a magnet below us still. Let those buyers, I'm not going to buy up here, right? I'm not going to buy those highs like that. I realize that some folks might, right? But not a short-term trader strategy, right? So let them try once, let them try twice. I will sell at those highs, obviously respecting momentum, right? Giving the buyers the benefit of the doubt, and then we can sell it back down into that trading range. And again, guys, remember, I'm just simply drawing on the chart of where I think my setups will be for tomorrow. If you want to see a lot more examples of these kind of reversals, these nested failure reversals, I cover all these, right, in that free trading course. You'll see a lot more examples, right, from real setups in the free trading course. So grab that in the upper right-hand corner. So again, not a lot has changed there. Nasdaq and the S&P. Just make sure, again, right, stay out of the middle. Stay out of the middle here. If we do end up going sideways here, not a lot changes. And this, of course, will also apply to the S&P as well. If we do go sideways here, I'm still looking to go up, looking for a buyer failure, come back down, right? I'm looking to go pop, right? Looking for a nested failure and back down. So not a lot changes there if we do tread water. If we go lower though, right? If we go lower, this is where things get interesting, because if we can crack below these lows here, we've got, again, that huge open space down there to make some money in the way lower here. So, as the market goes lower, we've got this big bear move down. We know they want to go back and retest that low. That low is the objective, right? So if we can get that short off the high, that is the target, right? Down at those lows here. So if they can run back and take out those lows, then what do we need? We need them to show us they mean business. They have to hold that pullback and jump right off the moving average. If we can get that 1, 2, 3, then that tells us now that obviously A, the bears have momentum, and more importantly, B, the range is no longer the magnet any longer. That's a really important part of that. So, again, I'm not going to sell that first pullback. There's two reasons why. One, because the low is the objective. right? We have to wait for proof on that. And we have that range overhead. So the magnet overhead, I'm not going to sell that first pullback. It's just not a very reliable place to get short. What I will do though is 1, 2, 3. Once I see evidence of that breakdown, now we're in business. Now I can mark up that low. Now I can mark up that high. And I definitely will be looking to get aggressive at finding whatever entry I can get off of the first pullback off the high of that new channel. And keep in mind too, right? Sometimes it'll be a 1, 2 go, and it's a very steep channel there. So it all depends on kind of how that thing looks, right? So take out those lows, show me the bears mean it, hold that pullback, and give me some strength coming off the moving average. Mark that low, mark that high, right? Get up around those highs. Most of the time, it'll be a failure into pullback, right? Combination, failure into pullback combinations are very, very common off those highs. You'll see a lot of examples of those in the free course linked up in the upper right-hand corner. But that's what we're looking to get short here as we go lower. Objectives as we go 654, 655. There, as we talked about earlier here. Can I buy the lows? I definitely can buy the lows. If we do take out these lows, that is a major turning point, a major objective. Once those bears complete the objective, then I can start to plot my entry using, again, the range as a magnet, right? Only problem is what? Momentum. Momentum is very bearish at that point. So I wouldn't mind being a buyer, but I got to wait for those bears to kind of dig their own grave, right? Let them try a couple times. And once we get those bears trying a few times, again, my favorite entry is a trap. I love traps. Traps are my favorites because they allow me to buy low. And, traps are great because there's nobody selling down there, right? They're selling up around these highs here. So it's a nice, easy, kind of low-risk spot to get long there. Again, only after 1 try, 2 try. I also like to grab those hidden channels off the high, off the low, right, and buy that channel low. Sometimes we get lucky and it's a channel and a trap, right? Sometimes it's only a trap or it's only a channel. We'll be watching to see what we get tomorrow morning once we do get there, if we do get there, for that buy going back up into that trading range. So that's how I'd buy the low here. And again, that's just because it's a counter trend trade, a counter momentum trade here as we go. So guys, again, pretty straightforward in the Nasdaq. I think the plan is pretty cut and dry. Only question right now is do we get the pullback? If we do, how steep is it? How strong is that pullback? And that will tell me kind of what type of entry setup I want to use to structure my entries for tomorrow. Wrapping things up here now on the gold. Gold is probably going to be the more difficult of the markets we see here for tomorrow, just because of the way it's setting up right now. We do have the ECB meeting and announcement on Thursday this week, so just be aware of that. If there's one market this week that might be a little bit squirrely, right? The gold is definitely going to be one of them, just again, because we've got this ECB announcement later on this week, and of course, everyone's kind of waiting to see what we can do with monetary policy at the ECB. So we know the market finished last week in a range, right? If you don't see that right there, right? Lots of overlapping candlesticks. The market, of course, punches higher and just completely falls apart and runs back down again. These are very difficult situations to buy. I know we have, you can see here, a bull market, right? It was pretty much a bull market into a trading range, but notice how the market runs up and completely just turns around, right, and reverses going lower here. We have a term for this, and it's called rotation off the high. Yes, I am at an area of support below the range, and I know that in most cases when I have a bull market into a trading range, I want to find levels of support below, right, and look for those failure patterns to buy those lows. So I do realize in a lot of situations, I would be looking to be a buyer down here, but it's very difficult right now to look at that big leg down, right, and try to justify here being a buyer on this. This strong move down creates so much momentum. There's basically just a magnet trying to drag that price back down to that 1766 and change down there. You'll notice, right, they went all the way to that pendulum swing, the amount above, the amount below here. So lots of bearish momentum right now. I would love to get this leg to come back down and retest that low. What I'm thinking right now, the gold is, and of course the range is right smack in the middle of this thing. What I'd like to do is either get this thing to pull back a little bit for us, right? Get up into some of these areas of resistance up top here so I can sell short there. Again, we have all of this momentum, right? All of that momentum, big magnet at those lows, or I wouldn't mind if it goes lower here on some strength and we can start to structure our entries now off the high, right, of a new channel. And let's not forget too, the market may just decide, you know what, we're happy right where we are, and we may end up going sideways here. So if I kind of get rid of this stuff right here, I left these rectangles on here just to kind of show you how strong that momentum was. It blew right through that range expansion on both sides here. So if I get rid of that area right here, I'm kind of left right now with my range overhead, right? That'll be a magnet. I've drawn my trend line, and there really isn't a lot other options here right now. And so pretty much I'm waiting to see. Are we going to get a pullback here right now to sell short? Or will this thing continue, right, and run low? Or will it go sideways here? So what's the plan if it pulls back right now? If it pulls back, we get a lot of bearishness, right? That's for sure. If it pulls back, and you know, I would love to get us up into this channel top, but really, as long as I can get into this range here, I'll be happy. What I'd like to do is take out these highs here, get these buyers to think now this market has reversed. Now the hard part's going to be it's a range. So these are those times where I've got to be a little bit careful. I would normally look for just a straight up failure pattern, right? And just wait for those buyers to buy and sell into stop losses. In this particular example, though, I'm going to be looking for a nested. I'll be waiting for the buyers trying once, let them try twice. You know, and again, do I get lucky and get a trap high on that, right? Trap will be great. Do I draw a trend line off of that low up around that high and sell that hidden trend line up there? You know, these are some of the factors I'm looking for as we go. But this area, right? Oops, sorry about that. This area up here is where I'd like to get us, right, short here for tomorrow. As we go higher, again, range is a magnet. Ranges are really tricky. Let those buyers try once. Let them try twice. Hopefully we'll get that trap, right, above the high. If not, we'll grab that little hidden channel, right? We can sell the top of the channel. We can sell into stop loss. Again, I go into a lot more detail of this pattern in our free trading class, right? So you'll get more details there. But now, remember, imagine now the market runs lower now, right? Imagine it runs lower now. We get those, right? Those stops getting hit. We can now mark up that low, mark up that high, and I can look for that short coming in off the high of that channel. So again, it's a net, we call these nested failures, right? It's basically a failure inside the pullback, right? Nested failure, right? So again, so the trap, so the stops, so the first pullback. Those would be some really great pickings here as we try to make our way back down to retest that low. If we do end up going sideways here, it would not surprise me. We oftentimes will see markets make a bullish into a range, the reverse and go bearish in a range. If we do end up going sideways here overnight, this is simply, well, at this point, it's very similar to the plan on the S&P and the Nasdaq, right? Find levels of resistance up overhead, wait for that pop up, wait for those buyers to come in, try to foolishly get long. At that point, I'm not going to worry so much about the big range anymore because, as I mentioned earlier, recency will be very important, right? So if we do end up going sideways here, that new trading range and that very bearish short-term momentum will be the key to success. I want to combine my failure setups, my failure triggers off resistance levels above that trading range. As always, take some profit off at the low of that range, measure the amount above, leave the amount below, and that'll be an easy target on the other side using that pendulum swing. And if you got an extra contract left, right, 1758.2, that's your next big level as we go lower here. Now, speaking of going lower right now, how do we sell this thing as it goes lower? There's a lot of bears in the market right now. It's already a bear market, so we don't need a lot of strength going lower here. If we do end up getting this into roll over, right, let's get rid of this channel here for a second. Let's say, for example, we do end up rolling over here right now. Very simple strategy, right? Mark that low, mark that high, get up around those highs, and I'm telling you, 9 times out of 10, You're going to see buyers get above the moving average, right? They'll try to buy the pullback. You'll get that gorgeous failure into pullback, into strength, into traps. There's so many options as we come off the high of that channel, right? Buyer failure, seller pullback, strength moves, trap moves. It all begins, of course, with that pullback off the low. So I'll be looking for, again, any of my favorite entry triggers will work. I cover those triggers a lot more detail in the trading course, right? I keep mentioning, again, it's absolutely free, right? Grab that free link in the upper right-hand corner and you'll learn all the details right in there. And of course, if we do end up really running, right? If it really runs, how do we try a really strong runaway market? If the market really takes off to the downside, a lot of times what will happen is you'll get this shallow pullback, this lower low in price, and that will trap low. Combine that trap with the high of a channel and you have a big time winner on your hands. One of my favorite techniques whenever we have a really strong market, right? You'll notice I've marked up that leg. There's kind of your measured move right there. Let's say, for example, though, right, again, if the market kind of just rolls lower, I'll find that channel and sell off the high, right, of that channel. If the market, if it sprints lower, keep your eyes open for that shallow pullback, that lower low, that trap high, and usually that trap will be coming in off of some new channel here. It's not necessary, right? It's definitely not necessary, but if I can get that trap high, again, strong move down, shallow pullback to the moving average, lower low in price, that trap is always on my radar. And again, if you can combine that trap with the high of a channel, I mean, just, easy, right? Very reliable setup there. And we know the bears already have controls. We don't need a lot of strength, but if we do get it, that'd be a great shot to sell off those highs. So guys, those are my ideas for tomorrow. These are the setups I'll be watching for tomorrow in the U.S. morning session. Hope I'll see you there, right there with us. Don't forget, getting registered is really easy. We trade together this same strategy every morning at 8 o'clock Eastern Time. I'll put all the membership links you guys need to join me every morning, the opening bell. I'll put all those details, the description of the YouTube video. If you're on the blog right now at Sideways Markets, grab that big button right below me on the trading blog. Don't be afraid to call the office. I'm always here. If you guys have any questions or if you want help getting registered and ready for tomorrow's trading session, don't be afraid to call the office there. I've got live chat on the left, live chat on the right, and you can always drop questions in the comment section if you got them. Hopefully by now, though, you subscribe to our YouTube channel. Hope I've earned that like button hit at this point in the video. And I hope you guys will come back and see us again soon. Again, tomorrow morning, 8 o'clock Eastern Time. We'll be elbow to elbow in the trade room together tomorrow morning. And if I don't see you guys tomorrow morning, come back and join us tomorrow night on the next edition of this video newsletter every evening this week, Monday through Thursday, with our best trade ideas for the following day. So don't be afraid, right? Don't be afraid to call the office. Drop those questions below, and I'll see you guys either tomorrow morning at the opening bell or same time, same place tomorrow night. Hope you guys enjoyed it. Hope you have a great rest of your evening. I'll see you tomorrow. If not, tomorrow night, we'll wrap things up again on the next edition of our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.